Have you ever been scammed? If so, then this video is for you. My name is Julian Gordon. I'm leader of the multifamily movement, and my mission is to make the righteous rich. But in this world, there are a lot of people out here who scam in order to get money instead of getting money in righteous ways. And the people who they try to scam are typically the righteous, good-hearted folks, probably just like you. On my journey, starting in college, I got scammed, getting caught up in my first pyramid scheme called 2x2.net. And from there, even as I came into abundance and wealth, I still got scammed, even though I am an educator in the financial space. And so today I want to lay out a blueprint to make sure that you nor myself get scammed again. And the framework I'm going to lay out for you is S1E1. And we're going to walk through that step by step by step. I'm going to give you 8 questions that you need to ask yourself before you make any investment that is greater than 1% of your income or 1% of your wealth. In fact, I also have a worksheet here that you can go get as we go through this process of me sharing my divine downloads. I'm always going to have a worksheet that corresponds with these videos because we have to get beyond just entertainment, but we have to get to education and actually application. So it's from entertainment to education to application, and worksheets and these frameworks have been very helpful to me, and I want you to have the tools to be able to make better decisions, especially when it comes to living the life that you desire or using the tools that I provide. And so again, this applies to you when you are about to make an investment that is greater than 1% of your income or 1% of your savings. So if you have $50,000 saved and you're about to make an investment of $500, I encourage you to run that investment through this scam framework. If you make $50,000 a year and you're about to make a $500 investment into some sort of entity that is not listed on the S&P 500, I encourage you to use this framework. So let's start off with the S in the acronym SCAM. The S is twofold. It is story and sound. The S is story and sound. So the first question I need you to ask yourself as you look at this investment is, does it sound too good to be true? Does it sound too good to be true? Now, I don't want you to get in scarcity-based thinking because there are some good opportunities out there. But even the good opportunities, we have to run through this framework to make sure that we're not getting scammed. And so let me put this in perspective for you. Warren Buffett, one of the greatest investors of all time. Do you know what his average rate of return has been on the Berkshire Hathaway stock over the past 40 years? His average annual rate of return. Guess what it is? You would think that it's some huge number, as that stock is, I think, almost $250,000 now from where he started 40 years ago. Since January 7th of 1983 to January 6th of 2024, Warren Buffett's average rate of return on the Berkshire Hathaway stock was 17.8%. 17.8%. Doesn't sound like a huge number, but when that is compounded over 40 years, this is how you see the growth that Warren Buffett has been able to create for his investors. And so the reason I share that with you is that Warren Buffett is perhaps the greatest investor of all time. And so if somebody comes to you promising or guaranteeing 20, 25%, 50% returns, then they're likely trying to scam you because almost nobody can guarantee that rate of return. There aren't that many people out here who are better than Warren Buffett. So that's the first metric, especially when you're looking at a financial investment where somebody is promising you some sort of rate of return that is greater than Warren Buffett. If that was the case, then Warren Buffett should take all of his Berkshire Hathaway stock and give it to this individual, right? So that they can grow it at 20% instead of him growing it at 17.8%. So that's something to be aware of. Now, of course, we don't want our money sitting in our bank account. As I teach you in Rich and Righteous, which is my book, Spiritual Secrets of Mastering Money Manifestation in Your Mind, money sitting in our bank accounts at a 0.03% interest rate is not going to create us wealth. We can't save our way to wealth. At a 0.03% rate of return in your Bank of America savings account, if you use the rule of 72, 72 divided by 0.03 equals 2,400. It will take you 2,400 years to double your money in a savings account. So this money, this thing that we call currency, is supposed to have a current. So we know it's supposed to move, but we don't want to rush after any get-rich-quick schemes, all right? Wealth is built over time and through patience, all right? So the other thing about this first question is, does this person ever show any losses? See, a lot of people who are trying to scam you, they only show their wins. It looks like ESPN, right? It's just a whole bunch of highlight reels. And yes, they want to put their best foot forward, but have they ever shown you any losses that they've taken? If they only show wins and they never show their losses, then you might want to stay in the zone of scam likely. And I want you to default to any investment as scam likely first. And then if they pass the scam test, then we can move to I'm ready to make an investment. All right. So we're going to default on scam likely just a little bit, not all the way like everybody's a scammer. No, we don't want to operate there. Right. We want to default to scam likely. And then if we see that the ducks are lining up, they're in a row, then we can move into making an investment. For me, I'm in the real estate space. I've been educating people on how to buy multifamily real estate. And I'm one of the lead educators in this space. To date, I've helped over 880 people close on their first multifamily home. Collectively, we bought over $350 million worth of multifamily real estate through the multifamily movement. And so I know that I'm not a scam. But because there's been so many scams in the real estate space from Caesar and DJ Envy and other people like that, people are skeptical. And you can actually miss out on good investments and good opportunities because of these types of investments that get a whole bunch of publicity when they are fraudulent. All right. So that is the first question. Again, does it sound too good to be true? All right. So that's where we're going to start. Second question is the story sound? Is the story sound? And there's three parts to the story. There's their why, which is their reason. Does that sound? Okay. Does their what? Does the vision of what they're trying to create? Does that sound? And then who they are. Right? The person who's asking for the investment. Does it make sense for this person to execute on that vision and fulfill this particular purpose or reason? So I call that the natural narrative. Usually when somebody's going to dedicate their life to doing something and take on other people's economic resource to do that, they have been doing this work in the past, and this is their natural narrative. And so when you look at the why this, who they are, right? Why they're doing it, and what they're actually doing, that should be pretty seamless. That natural narrative should add up and without too much thought. It should just be easy. They shouldn't even have to rehearse it. It should just be a natural narrative. So that's another way to ask the second question of, is the story sound? Is the narrative natural? Right? Does it actually make sense? All right. So that's the second question that we want to explore when we're looking at scam. Okay. So all of that fits under sound and story. Okay. Now we're going to move on to the C in the word scam. And C is capability and commitment. Capability and commitment. So let's start with commitment. The third question is, has this person shown commitment to this work for years and success prior to this investment? Okay. So typically when we look at successful people, right, they should have been doing this work for quite some time in some sort of way. Okay. How long has this person actually been at it? We know that Malcolm Gladwell talks about the 10,000 hour rules. It takes about 10,000 hours to master anything. So this person should have accumulated some sort of degree of mastery and time actually doing this work prior to asking for any investment. They can't just be brand new to this thing that you're about to invest in. All right. So that is really around their commitment prior, not whether they're committed to actually, I mean, there is the commitment of them actually doing the work, right? But have they been committed to it prior to asking for other people's economic resources? Okay. The fourth question is this person capable of executing on this idea given their past experiences and successes? Is this person capable of executing on this idea given their past experiences and successes? Right. And so do they have a track record, right? If they are asking you to invest in real estate, you have to go see if they actually have any real estate for themselves in their personal portfolio. For me, when I started teaching multifamily real estate investing, I had over 20 doors in my personal portfolio before I started teaching it to others. And then I helped one of my good friends, Chris Kazi-Rowe, actually acquire his first multifamily. And once I saw that the methodology that I was using for myself could actually work for other people, then I started teaching it. I didn't even initially intend to teach real estate investing to people. That wasn't the path that I thought I was on, right? But as I saw it helping other people and I was getting questions from my community, that's when I started doing it. So it was never about money. It was about helping people get to and experience what I was experiencing, which was rent and mortgage freedom, because I had bought multifamily real estate. All right. So again, the fourth question is this person capable of executing on this idea given their past experiences and success? All right. So again, I'm giving you a worksheet right, that you can download. This is called Divine Downloads. And when I get tools, I don't just want YouTube to be or any platform to be just entertainment. I want it to be education and application. That's where the real work gets done. And so you'll have this tool that you can use anytime you get an investment opportunity, and you can run it through the scam framework. Okay, so we call those divine downloads. All right, so moving on to the A in the word scam. Okay, A is accountability and agreements. So let's start with agreements. Question 5: are notarized legal agreements in place to protect you? And have you read every line? See, sometimes we get so hyped about the investment that we don't want to look at all the legalese, right? And all the fine print that is there. And it's really important to do. In real estate, sometimes we call those subscription agreements. We see them as operating agreements. It's really important that you read the paperwork. And if you can't read it yourself, you need to have a lawyer review it. Okay? You need to have a lawyer review it. Sometimes these people will be so bold to ask you to not even provide you with any paperwork. They'll just be like, here's my wire information, just send the money and we good. And it's just like, what do they call it? A gentleman's handshake or something like that. We don't want to operate like that anymore. Okay. Then in those documents, you want to look at the risk reward structure, right? Who is really bearing all the risk? Does that person have any skin in the game? Have they put any money of their own personal money into the deal? Or are they just assuming that you are going to take all the risk by putting your money up, your hard-earned money up? So you want to look in the operating agreement or the subscription agreement for the risk reward structure. Now, typically in these types of deals, the manager or whoever is requesting the money from you, the investment, they should benefit if they exceed expectation, right? They should benefit on the gain, right? So sometimes there will be an 80-20 split of equity in this venture, right? Meaning that they might not put in any money because they're doing all this sweat equity and you're putting in the financial equity. So you own 80%, they own 20%. And then if this thing starts kicking off cash flow, then they might say that I get 30% of the cash flow and you get 70, or it might be a 50-50 split on the cash flow that is created. So you want to look at the risk reward structure. And I typically want everybody that I'm investing with to have their own skin in the game, a little bit beyond just sweat equity. All right. Sweat equity means that they're doing all the legwork, and which you may not be able to do because you're working a job or you're running your business, and they should get rewarded for that as well, because sweat equity is valuable. Okay. So the next thing is accountability, right? Question number 6. Are you clear on the methods to hold them accountable for acting in your best interest? This person is going to be operating perhaps in another state or on another side of town, and you won't be there side by side with them day to day. So you need to be clear on the accountability metrics that you have to hold them to what they said they were going to do. Okay. And I'll add another A here is you might want their address too. Like, people need to know that they can get touched if if they're not acting in your best interest. So what does accountability look like? It looks like the structure of their board of directors, right? It looks like if this starts to go south, do I know the process and the steps to establish a conservatorship where the board or the investors take over the particular fund? You also want to look at the process to go through the SEC and to file a complaint and get the SEC to investigate, or your district attorney, right? Or or the attorney general, right? So you want to look for how are checks and balances set up if this person doesn't act in the best interest, not just my personal best interest, but the best interest of this investment, right? So these are some things that you want to look for as you go through the worksheet, as you evaluate this investment. The last letter is M. Okay. M stands for management and metrics. Management and metrics. So in question number 7, are they surrounded by the right people? Okay. Now, again, if this is just one individual, right, who has had the courage to go out there and do this, they might not have a full paid team unless they're raising a lot of money where they can bring on people full time. But if they do, who are their team members and what are their track records, right? Who's on their board? Who are their advisors? Even if they're not on a board, who are their advisors? Who are they connecting with, right? Who can support them when they have to make tough decisions? And typically we want the board or advisors to be people who are senior to them, who are better than them and more advanced than them in this particular space. And then you might want to look at their partners, right? Are there particular organizations that you trust or corporations that are partnering with them on this venture, right? So these are some things that we look for in terms of accountability, management and metrics. So From the last question, question 8, right? When it comes to metrics, are there clear metrics of success and reporting mechanisms that will let you know that they are on track, right? So how do you know between the moment you make your investment and the moment you're expected to get your return, how do you know that they're making progress along the way, right? And how often are they communicating that with you? Is it monthly emails? Is it quarterly calls, right? Is there a website that you can go to access updates on how the things are going, especially if they're doing construction or building, right? Are they reporting to the SEC on time? I know one of the major investments that I made, they were delayed by almost a year in their reports to the SEC. So we as investors were literally left in the darkness and didn't know if the fund was doing well, right? And therefore, our action or our response was delayed. We also want to look for clean books, right? And usually, if they are reporting late to the SEC, it means that their books are not clean. And if their books are not clean, why aren't they clean, right? That is a management issue, and a lot of funny stuff could be happening with the books, all right? So let me run through those questions one more time. And again, you have the worksheet here that you can use and download to make sure that you don't make any more mistakes when it comes to your money, right? It's not just about how much you make, it's about how much you keep. So again, S is story and sound. Does it sound too good to be true, right? Second question is the story sound? Does their why, their what, and the who actually make sense? What is the natural narrative? This C is capability and commitment. Has this person shown commitment to this work for years and success prior to this investment? And is this person capable of executing on this idea given their past experiences and success? All right. Then we go into the A, which is accountability and agreements. Are notarized legal agreements in place to protect you? And have you read every line? And are you clear on the methods? Number 6, are you clear on the methods to hold them accountable for acting in your best interest? And then finally, M, management and metrics. Are they surrounded by the right people? That's team members, board, advisors, partners, etc. And number 8, are there clear metrics of success and reporting mechanisms that will let you know that they are on track? All right. If you run every investment that is over 1% of your income or 1% of your savings through these 8 questions, I'm pretty certain that you will be less likely to get scammed in this online environment where money is now digital and you're meeting these characters and these personalities online. You don't know if you actually trust them. You don't have a personal connection to them yet. You don't have their personal phone number. You don't know where they live, but you see an opportunity and you see something that you believe in. If you run it through this metrics, it'll move you from scam likely to yes, this is a scam to scam likely. This might be a good investment and I'm willing to take the risk and go forward. Now, every investment does have risk. You want to know what the downside, the full downside is. Sometimes the downside could be losing your entire investment, but there are certain industries where you should not ever have your investment go to zero. So you also want to know in the operating agreement, what is your way of pulling out? If you can. Some investments don't allow pull out for a certain period of time. There's a certain hold period that is required, especially in real estate, where we have to be putting the money into actual real estate. So if you want to pull out your money, how can I pull it out? It's actually in the dirt or it's in the building right now. So there's no cash sitting to pull out. I'm putting your cash to work. So you want to know those kind of things as you make investments. But if you've been scammed, my encouragement to you is to not lose faith, because we know that we can't save our way to wealth. And yes, you have the stock market, but there are other opportunities to invest in companies. There's opportunities to be at the cap table where this company isn't on the S&P 500 and could be the opportunity that takes your wealth to a whole nother level. But we just want to make sure that we're not getting scammed. You can lose when it comes to investing, but if you do lose, we want to make sure it's not because of a scam. So I hope this video helps you as you navigate how to create what I call regenerational wealth for you and your family. And I'll actually be doing another video on financial forgiveness. So if you have been scammed, how do you forgive not only that individual or that organization, but how do you forgive yourself for making that decision so that you can move forward towards your financial future that you desire? All right. I hope this blesses you. Go ahead and download the worksheet so that you have the tool available to you when more opportunities come, because more opportunities are coming. Opportunities find money and money finds opportunities. And if you have money, I pray that the right opportunity shows up for you. All right. This is Julian Gordon from the Multifamily Movement, here to make the righteous rich. And I pray for you purpose, prosperity, and property.